Advanced retail sales rose for the month of June by 0.6%, beating estimates on the street and marking the biggest increase since January. Sales were helped by incentives at car dealers and also higher gas prices, which boosted service station receipts. We also got a read on inflation at the wholesale level. The producer price index rose by 1.8% in June. That was double the expectations. And again, higher fuel prices sparked that increase. Okay, well, let's get more reaction to those sales numbers with David Abella. He runs a $2.1 billion fund at Rochdale Investment Management and is also a senior equity analyst specializing in the retail sector. Now, Abella says investing in retail is contrarian and that it's prudent to be defensive in the sector. And David, good to talk with you and great to have you with us. Okay, so why is it contrarian? I mean, these numbers seem to support it.
Well, it's a little bit contrarian in that some of the move in retail, at least off the lows, has been the more discretionary retailers. And I would say that that's a bet that I'm hearing more and more people want to make, get out of the Walmarts and get into the Best Buys or even the Coach-type names. But I would say that it's a little early to do that, especially for a defensive investor.
Why? Why is it too early? Because you don't have enough numbers yet to make that?
We don't have enough numbers yet. Back to school sales will be a very important metric as to where retail sales are going. It doesn't necessarily affect Best Buy, but it'll show the overall strength of the consumer. And I definitely think no matter what happens with the consumer, price and value will be very important. So names like Walmart and Target and Costco.
So is that who you want to stay with, or how do you be defensive without being too defensive?
Well, I would say that's still who you want to stay with at this point. I think investors need to be a little more nimble. I'm not saying that you would buy and hold those three stocks for 10 years. It may be that back to school looks pretty good, and let's get out, rotate into riskier names that could do better in an economic upturn.
Now, why did these numbers come in so much better than expected? I mean, judging from the sales numbers we got in the last few weeks, or the last week or so, I mean, it seemed as if June retail sales were actually going down quite a lot.
That's right. The same-store sales last week were just pretty bad.
Yeah,
I mean, the worst in a long while. But that was mostly apparel and very discretionary retailers. This report was car dealers, cars which really bottomed out, had an upturn. You also had gasoline driving it. You have the discounters and the general merchandisers that weren't necessarily in last week's report as this overall broad report. But if you look, the headline number was positive. The year-over-year was still double-digit negative in some cases, or high single-digit.
Right, so it's still not the turn yet then. When are you going to, after you get the back-to-school numbers, I mean, is that when you feel like, excuse me, got a frog in my throat, is that when you feel that you are going to get a better sense of the retail outlook?
That's right. You know, if back to school is better than expected, one could say, you know what, maybe we have made the turn. Holiday season will be better than expected. It's maybe time to get in the more discretionary, the little bit riskier retail names. Some of them are pretty beaten up. You have, in some cases, high single-digit price-to-earning multiples. Walmart at 14 times, Target at 14 times, Costco at 17 times. You're not necessarily getting great deals on those stocks. They're fairly priced.
Now, you mentioned Walmart. I mean, we've talked about Walmart, I think, David, for the last 12 months as being a good defensive play. But the stock's down something like 15% this year. So if it's so great, then why is it doing so poorly?
Yeah, that's a great question. It has not been a good defensive play, say, for 2009. It was a great stock relative to the rest of the market in 2008. It peaked a little early, September, but it then held in the fourth quarter pretty well. It hasn't done so well. That's why I think Walmart is more of a contrarian investment. If the consumer stays sluggish, if people don't trade up, if they retain that market share, I do think Walmart at these levels is a good investment. And it's a little contrarian because I think there's rotation out of Walmart into riskier names.
Okay, David, always enjoy talking with you about retail.
Great to be here.
David Abella of Rochdale Investment.